Hello. This video focuses on pages 10.5 through 10.14. On 10.5 we start talking about partnership income reporting. Alright, partnership income is reported on Form 1065, which is replicated on pages 10.7 through 10.14. Okay. Now, this form is used when you have income that is not related to rental properties. Okay, if you are reporting a partnership that is primarily rentals, you are going to use Form 8825, and generally you would not see anything on the front of the Form 1065, which is replicated on page 10.7. Okay, so let's go ahead and take a look at Form 1065 and Schedule K1. I'm not going to go over every line on Form 1065, but I do want you to be aware of certain lines that are going to come up with virtually everybody. Okay, first of all, you have the top part. Okay, you identify the principal business activity. Okay, you know, for example, retailing. All right, and then you have principal product or business. Okay, on line B up there in the top left-hand corner of Form 1065. So, you know, that could be, you know, grocery store, something like that. Okay, the business code number, you'd have to look that one up. It's a 6-digit code, and basically this is one way that the IRS can track income from certain businesses around the country. Okay, all right, the name of the partnership would go right smack in the middle. All right, in the old days we used to have mailing labels that we had to stick in that area. We've done away with that a long time ago. All right, but every partnership has to have an employer identification number, so make sure you get that from the IRS. If you don't have one, you can file Form SS, that's Samuel-4, all right, with IRS to get your EIN. All right, you would put on there the date the business started. Okay, leave line F alone for right now. All right, we move down to line G. If this is your first year, you would check the box that says initial return. Okay, if you close your partnership, make sure that you mark it final return. Otherwise, the IRS is going to keep looking for tax returns in future years. If there's a name change of the partnership or an address change, you would check those boxes. All right. If you are amending a return from a prior year, you would check the box that says amended tax return. On line H, you check the accounting method. All right, you check the accounting method. For most small partnerships, cash method is perfectly fine. Larger partnerships, of course, would use the accrual method. All right, number of schedules K1 that are going to be attached. Okay, well, that depends upon how many partners you have. There's one K1 for each partner. So if you have 10 partners, you have 10 Schedule K1s. Okay, all right. Don't worry about line J for right now. Okay, lines 1A through 8 is the income area. This is where you're going to report your gross receipts. You're going to report any returns, you know, sales returns and allowances that you had. That'll give you a subtotal. Then you subtract your cost of goods, which comes from Form 1125A, all right, Section A. All right, and then you would subtract that and to get your gross profit. That sounds a lot like financial accounting, and it is. Okay, all right. Then if you have any income from other partnerships or from a farm, or if you have any gain from Form 4797, and that form is used primarily if you sell any kind of a plant asset in your business, all right, you would report that on line 6. Any other income would get reported on line 7. Okay, that could be something as simple as interest income from a savings account. So your total income then ends up on line 8. Okay, now line 9, that's always a fun one. All right, it says salaries and wages other than to partners. Okay, partners cannot pay themselves a paycheck. Very, very important. I'll repeat that. Partners cannot give themselves a paycheck and give themselves a W-2. That doesn't mean they can't get paid. Okay, you know, they can write themselves a check for cash anytime they want to. Okay, but they don't take out federal income tax or Social Security taxes or local or county taxes. In other words, a partner can never be an employee of their own partnership. Okay, now you could have, you know, a taxpayer and a spouse, husband and wife, however you want to put it, and one or the other could be an employee of the partnership. Okay, as long as that person is not a partner in the partnership. So you'd actually probably have to have 3 people. You'd have to have 2 people, and then one of their spouses or both of their spouses, right, could work for the partnership. All right, but the partners themselves, okay, can never be an employee of their own partnership. So that's why it says other than to partners. Okay, line 10 is brought up later on in the chapter, but line 10 is what they call a guaranteed payment. And a guaranteed payment is basically, you know, if it's on the books, it would be an expense account. All right, it would be an ordinary business expense. On the tax return, it's an ordinary business deduction. All right, we'll get to that in a later video, but if the company has any guaranteed payments to partners, okay, that'll be reported on line 10. Okay, the rest is pretty self-explanatory. If you have any depreciation on Form 4562, that would be reported on line 16A and so on. And the ordinary business income then is calculated on page 22, or on line 22 of page 1, I'm sorry. Okay, so let's go ahead and take a look at the second page of Form 1065 on page 10.8 in your book. All right, up at the top you have to report what kind of an entity is filing the return. Okay, if any time you see the word domestic used, if it's on a federal return, that means that the company is based in the United States. If you're filing a state return, that means that that company is based in that state. Okay, all right. If it says foreign partnership, like it does on line 1E, that means the partnership is based outside of the United States. And if you saw that line on a state tax return, that means that that company is based outside of that state. So that's what those terms mean. So the company is generally going to be either 1A or 1B or D. In other words, they are going to be either a general partnership where all the partners are general partners and share in the management of the partnership, or they are going to be a limited partnership where you have generally one general partner and the rest are all limited partners, okay, who do not participate in the running of the business, in the management of the business, okay, and are limited, their losses are limited to their interest in the partnership. Okay, so let me skip down to line 6 on page 10-8. All right, one of the things that I have found, especially with small businesses, is many times they'll come to you and they'll have their tax returns done, but they'll not necessarily have financial statements done during the year. Okay, so there's a question on line 6 that it says, does the partnership satisfy all 4 of the following conditions? A, the total receipts for the year were less than $250,000. B, their total assets at the end of the tax year were less than $1 million. All right, that would include cash, accounts receivable, inventories, and the book value, all right, not the cost, but the book value of the property, plant, and equipment. All right. C, the Schedule K-1s are filed with the return and furnished to the partnership, be honored before the due date, including any extensions. And D, the partnership is not filing and not required to file Schedule M3. If you can answer yes to all of those, and you probably will to most small businesses, Okay, then you do not have to complete page 10-11. So let's go ahead and take a look at that. Okay, it says on page 8 you do not have to complete Schedule L. Schedule L is the balance sheet per books. Okay, if a business has not been producing financial statements all year, that could get to be a little bit of a hassle. All right, with my clients, if they satisfy all 4 of those conditions on page 10.8, I generally do not complete anything that you see on page 10.11. 1, it would increase my fee to them, and it doesn't really give them any extra value. All right, and 2, it does tell the IRS more information than they legally have the right to know. All right, but again, it's totally up to you and your client whether or not you want to fill out Schedule L, Schedule M1, and Schedule M2. Now, I will tell you, if you're watching this video, that Schedule M1 is going to be on your next test, because it is kind of important. All right, if you take a look at Schedule M1, line 1 says net income loss per books. That would equal the net income that was actually on the income statement of the business, if they had one or if you could produce one. Line 9, okay, is the income of on the tax return. Okay, and generally line 1 and line 9 will not equal. If for nothing else, if it's because the business will take financial depreciation on their books, but will take makers or accelerated depreciation on the tax return. Okay, all right. So part of the next test, all right, is for you to determine what line 1 and line 9 are of Schedule M1. Okay, on the Form 1065. So I would suggest that you look at the solutions that are for Chapter 10, all right, and look at any solutions that involve Schedule M1. All right, Schedule M2 is the analysis of the partners' accounts. And I'm not saying that you shouldn't do this. It's not a bad idea to prepare these. Okay, it's just that honestly, most of your clients may not want this or even need this. Okay. All right, something else that I want you to look at. All right, if we go back to page 10.9, all right, make sure you answer line 18A and 18B. All right, what that is if you have contracted labor. All right, now, again, this goes back to a previous chapter, but if the business paid more than $600 to an unincorporated independent contractor, they have to send them a Form 1099 by the end of January, all right, for the previous year. Okay, so it asks you on page 18A, did you make any payments that would require you to file this form? And if so, will you file the required 1099s? In other words, will you send the independent contractor a 1099 MISC, all right, like you are supposed to, all right? Okay, and when I say you, I mean, of course, the business that's on the front of Form 1065. All right, lastly, I want you to take a look at Schedule K, line 19. If the business distributed any cash or any other property to the partners that were not guaranteed payments, you would put that on line 19. Our next video is going to discuss Form 1065, Schedule K1.